Welcome to the blog for Tuesday the 14th of August. This is day 47 of 65 of the compound effect. Making forward progress every day, applying my edge, applying my method, sticking to the goal and making sure I'm doing all the little things and moving ahead to be achieving my goals. So here's the trading plan, and today, what I've got is these areas I keep talking about, three strategies all based on specific key levels in the market. Strategy one very much based on predetermined big key figures in the area, and that's sort of the what would I almost want to say, the guts or the middle of the trading day when it's not near its highs and lows. That's what I deal with. Then I've got the same sort of concept, but breaking the highs and lows. As a result, I introduce other markets, Russell and things like that, because when you're dealing with highs and lows, it can become a completely different game. People are either looking to extend through the high or low, or get a bounce and back into the range. So I really need to incorporate other markets, just not enough to have a price there. Whereas strategy one just dealing with price and just going with momentum and continuation. And then strategy three, dealing with pivot areas in the markets, knowing that even though there might be certain directions in the market, there can be some brilliant times, and today was a perfect example, which I'll run through, of where all of a sudden momentum just completely changes. It's not necessarily going to be for the whole afternoon, which it ended up being, but what I'm meaning is there could be just a real short burst of pressure in the opposite direction, and I want to take advantage of those, and I call that pivot areas with my reversal and directional breakouts. But sticking clearly to these three strategies really was worth its weight in gold today, because basically, there was an area where a 5-minute fade came up, which we'll go through in a sec, where it's just a normal 5-minute fade based on indicators. It wasn't based on a key level for me. It was right in the middle of the markets as well. So even though the trade looked good, I really liked the area. It just didn't meet my strategy. It wasn't based on key levels. So for that reason, I left it, and as a result, it did fail. Not that it's going to fail every time, but it failed, but it wasn't one of my entries. And then I was able to actually take advantage of that failing particular fade with a pivot entry, which was, of course, according to my strategy. But just felt today really good examples of just sticking really strong to the method. And at the end of the day, it doesn't matter what the method is, as long as it's very systematic and clear, and just keep on taking the same area over and over again, and that becomes very clear that needs to be done, as in having a systematic approach where you're there to execute the model. You're not there to make decisions as to whether you do or don't take the trade. The model does that for you once you've created the model, of course. Alright, so here's the breakout block. So this is the border I'm placing around the pre-market range, using it as a direction to really get an idea of what the market's going to do today. It's also a potential trading area. And you can see two key levels in the marketplace. This 1403 level wasn't actually placed until we really used it as support here. So I'd seen it previously. It's not a level that shows up in 60-minute charts yet, but what I do is, before the start of the week, I'm taking really significant key levels off the 60-minute charts and also the 15-minute charts, but mostly 60-minute charts, and sticking with them for the week. Occasionally I'll add in levels if all of a sudden a significant level becomes apparent. And this particular one, I was keeping an eye that 1403 was definitely a region. Hadn't really had it marked it yet, but when we just respected, like you wouldn't believe, and just kept on bouncing off it, then added in, and just throughout the day it just became an amazing level, and to the state now where on the 15-minute charts I basically see it as probably just one of the most significant levels currently in the marketplace. But I'll bring up a 15-minute chart in regards to that in a sec. So that there's a key level. Also got 1399 as a key level, and overall looked at three areas: the potential breakout, which didn't meet the criteria, reversal, and then a breakout trade. Daily charts, before I move on, there we are, there pushing back towards the highs. So again, there's nothing really there for me to interpretate, so I've got to slip over to the 15-minute chart. There's a lot going on. So obviously there's lines and things all over this. You've got to interpret the charts the way you do, and again, it's all about being systematic and keep on doing it the same way. I've got trend lines and things drawn over here. I'm just looking, basically this is just support and resistance, whether it be horizontal through these support and resistance lines, or vertical through the trend lines. A really significant thing, it was a real help to see the downside, was this line here. You can see it, and I love trend lines when they basically use it to both sides. Like a support resistance line, once the market uses it, say for example a floor, and then gets through it and then uses it as a ceiling, that makes that line so much more significant. So this one here, we've come from underneath it and used it as resistance to the tick. So I had this previously drawn, all of a sudden this started pushing away, because I did expect this to go higher here. All of a sudden it starts pushing away. That showed a lot of downward pressure. I've also got this trend line up here. It's not too significant at the moment. It's just a bit of a basis. You can see it's not really clear. I've just got there as a guide. There's that 1403 level. What's happened is basically sort of as a bit like the directional breakout trade. It's sort of the market's really been contained within this range. If you go back through the market, we've just been in this really sideways range where they couldn't get above 1403. All of a sudden they did. They bounced off it in the pre-market. They bounced off it in the cash market many times before eventually breaking, which there's a breakout trade there which I was looking at. So basically just wasn't really looking at anything at 1403 as far as sell as it's approaching the level, but once we got underneath it, and as the trade took right at the end of the day, I was very keen to hold on to a long trade, because I knew that once it broke, it's almost like the floodgates opening. It's held. It's an area that should hold. Once it breaks, the market's going to push straight through and get back into this range, which is what they're doing now. So many things there that I don't specifically trade, but very much influence some of the decisions I'll make throughout the day, especially in regards to exits. That's something we're talking about at the moment. Exits, I need to spend a lot more time on exits. They should be just as much time as the entries, because at the end of the day, they can make or break your result as far as profitability for the year. So breakout block was the first area I'm looking at. Once it pushes through here and all the markets go through, look for it to come back, use this as resistance, and continue on. Just today, wasn't knowing that, even before I put this line in, knowing that 1403 was a support area, but still, if the trade was there to be taken, I'll definitely be taking it. But of course, as part of the trade, I need other markets support. I've just got the Nasdaq up here. You can see the Nasdaq, as I'm looking at it, see the Nasdaq had broken back up and it was putting pressure on its highs. So it kept rebounding and getting back right up into its range. So just Nasdaq didn't want to bar up the downside. And so as a result, didn't take any sort of directional selling trades, because there just wasn't pressure or momentum through this, or with this area here, and just didn't look like I was going to use it as resistance, which is the case. It popped back up into the range. So from there, I think this, to me, because I've got this breakout block drawn, it's still quite a little bit of a sideways range. We haven't really picked a strong direction yet. Then we came to this area here, so this is where the 5-minute fader looked at. So to go to the 1-minute chart shows a little bit better. Where is it? Here it is here. So basically the market pivoted from here. Actually, I'll go back to the 5-minute chart. So what's happening is the moving average is pointing up. As far as a 5-minute fade goes, based on indicators, brilliant error. It's pushed up through this sort of sideways range here, and a bit like what I use for this directional trader. You get above it, then it's going to use the top of this sideways range as support. So sort of 1405.50 was a price action support, just as far as, not a key level, but just as far as its immediate price action. It's an area where the market could really get a bounce off it. You can see the entry came right there, so it's a good chance for it to hold it and go back towards the highs, especially after seeing this market fail to go down so many times in the morning here. So from a discretional point of view, I really like this as a trade, but just can't enter it because it's just not based on my strategy. There's no key level to hold it up there, even though there's a bit of a immediate support area. For me, it needs to be based on a key level, so for that reason had to leave it. But what I'm very interested in seeing is it fail, because that's based on one of my strategies. Here's the point where it held and went high. You can see it went significantly high. It got a real charge. I thought, okay, the fade's actually going to work, and looks like it was going to push higher. Then all of a sudden it failed, so it fails to go higher. So when it fails to go higher like that, and comes back and places pressure on this pivot area, so where it launched to go higher from it, and technically should go higher, if it places pressure on this pivot, there's going to be some really great pressure on the downside, just for the short term at least. And what I also need is other markets already breaking through, just to give it, again, it's that clarity or that support from the other markets. And if I go to the Russell, so as it's going here, okay, so here's the Russell here. So this is what happened. There's that candle there. It significantly broke, and the Nasdaq looked even better than that actually. So all other markets were just flying through this pivot point here. So quite often try to get on a little bit earlier, say at the actual level, even a tick or two higher. This particular one, it was a real pressure point. I thought it just really needed to break for me to be on board here. So I actually waited for a tick break here, and then eventually it went. But ended up being a break-even trade. Got some contracts out at five ticks, like I've been doing, and then the rest come back to break-even, and it just kept on going sideways, and eventually pushed lower. But the overall, so this is what I mean. It's a change in direction. It doesn't necessarily have to last for a long time. It's just enough to kind of just get a bit of a spurt. But sometimes it's the start of a whole new selling trend, which in the end it has been. But there was quite a sideways area first of all. Then we came into this very sideways range, very boring afternoon in the markets. But for me, it was I guess I'm sitting here just thinking, well, there's nothing really forming on the upside. I wasn't really keen on the upside, but just knowing that if a breakout trade eventually formed here on the downside, I'd be very keen to take it. But it has to set up with all the other markets supporting it. Just knowing, keeping in mind, those longer term charts, the 15-minute charts. So for that reason, if I didn't have those charts, or didn't have an understanding of the longer term markets based on this area here, and based on this level in the market, the down trade after seeing all this sideways, very slow movement, it just wouldn't interest me one little bit. But with the longer term picture in mind, all afternoon just sitting here waiting, going, as soon as it gets underneath this gap, so the gap was 14.0250, and the key level for me was that just right near that other. The immediate price action level. So it's right near that key level as well. But I'm watching it just all through here. As soon as it gets through it, comes back, uses a resistance, and that's where I'm going to look to sell off. But I need it to get through that level because it previously hadn't been able to get through it. I think it went 4 ticks exactly, but this particular one, all I was really interested in going about 2-3 ticks past the area just to confirm. And I was on it, but I was waiting. Push through, come back. As soon as it come back, hit here. Well, basically I had the order on here, and once it's hit, it's actually come through 3 ticks. I didn't know if it was going to hold, and eventually it's just gone and really raced to the downside, and that's where the markets are really launched down from at the moment. This particular one, again, five contracts out at a third of contracts out at 5 ticks, and another third out at 10 ticks, and then just let the other third just go. I'd actually opened up the profit target, just thought we could really push down quite quickly. Maybe I let a bit too much go. It's popped down and actually went about 5 points and still didn't take that. I just had my last lot of contracts basically sitting at this 1400 to get out at 10 ticks at worst case, and then if it just keeps on falling down, I was looking to really take a big profit and hopefully see this thing just drop like a stone, which I thought had potential to do, which it did that, but maybe I let it ride a bit much, but in the end it came back and got me out for 10 ticks as well. That last lot of contracts, so they went a long way. We went about 5 points and then came back and got me out at the normal 2.5 points. So overall, averaged out to be an 8.5 tick trade. But one that just, I guess one of those feel good ones where it's just you've set up your strategy. The strategy went really well to pick up the area, and also using those longer term charts. So that's a wrap up for Tuesday, and we're back Wednesday.